Happy lunch hour, guys. So Tuesday morning here, Tuesday lunchtime now here, and one thing I really like to see. All of a sudden, I'm getting emails from you guys. Have you seen the 10-year bond? Have you seen the 10-year bond? And yeah, obviously I pay attention to it, but it's nice to see you guys doing it too. Now, uh, which leads into a little bit of what's going on here. Yes, the 10-year eclipsed 175, which I told you was a worry point last week. Okay, or I told you a long time ago it was a worry point, but it crossed it last week. Well, as I'm recording this, we're at 184. Okay, so 10 basis points above the worry point. And of course, the market is taking it in the freaking teeth today. As I'm recording this, the Dow is down 560, the S&P down 78, and the Nasdaq's down 290. So 1.5 to 2% down in the markets today. Is this the beginning of, I'd say, a correction, but we're pretty much already there. So is this the beginning of somewhat of a collapse, I guess is a better way to put it without freaking people out? Maybe. Best I can answer for you. Now, so looking at some of the other things that get very interesting about this. About a little over an hour ago, the Federal Reserve is canceled today's Treasury purchase due to technical difficulties. Okay. Now, this is where the Fed goes back and buys bonds out of the market, okay, basically to, just like anything else, like a company buying back stock or whatever it is, paying off some debt, okay, which how they're paying it off is with more funny money, but this is the point. But this is what I was telling you before is where it gets worrisome. What's the Fed trying to do? They're trying to buy back some of this debt lately, okay, that they were paying interest on at, hypothetically here, but the numbers are correct. They were buying back the stuff they were paying 2% on and reissuing stuff that they were paying 1.7% on. Okay, that's what's been going on, just for the 10-year, for example. Well, now that interest rates are going up, this is what I was telling you before, it makes it more difficult for them to issue new bonds. It makes no sense to go back and buy bonds that are paying let's say 1.8% and reissue them at 1.84%. That makes no sense. Now, the Fed is claiming, like I said, technical difficulties and that they're going to reschedule the bond buyback tomorrow. Okay? My question, though, is this. Obviously, we all know the stories of, Congress knows what's going on before we do. The Fed knows what's going on before the open market does. Hell, how's Nancy Pelosi got to be a multimillionaire, because front running the stock market. What does the Fed know? Is this just a blip? Is the Fed now speculating on the bond market? Do they just think that the market's going to come down today and bounce tomorrow? Hence, bonds usually working inverted the stock market. Is that what they're expecting? That yields on the bond will come down tomorrow? Who knows? I mean, again, remember this, guys. When yields go up, which they have been, prices come down. So as the yield goes up, it makes more sense for the Treasury to buy it back, except they're the issuer. And they can't reissue because the Fed doesn't have any money. So in order to keep the, if you will, government solvent, the financial system solvent, not even the government, our entire way of life, our economy, the dollar, it's got to be a zero-sum game. If they buy it back, they've got to reissue it. They can't leave a gap. The Fed doesn't have somewhere to borrow money from, technically. Yeah, don't get me started in this, okay? I get real wonky real fast in this one. I'm trying to explain it so everybody else can understand it. But My guess is the technical difficulties are we've crossed the 175 barrier. Now, where do we go from here? We get to 2. And I've said this a long time ago as well. We get to 2. Forget it. Now we're starting to see meltdown. Okay. If you go and look at the dollar index is actually up today. The dollar's strengthening a little bit. Surprising. However, the VIX, the volatility index, okay, the fear factor, the fear index for the market, is up 16% today. The market is afraid of what's going on. What panic is starting to set in the economic world, okay? And I said this 9 months ago, that be careful, watch out for when we hit 175, that now the government can't afford to borrow more money. And they've been manipulating the economy for the better part of 2 years, okay, throughout the entire pandemic, with the bond buybacks, artificially keeping interest rates down, et cetera, et cetera, et cetera. Now they can't afford to at this point, okay? This is where that tipping point came to. Now they can't afford to artificially do it because, like I said, now you're borrowing money to pay. You can't rob Peter to pay Paul. You can't borrow money at 1.84% to pay off money at 1.8% or whatever it is. That makes no sense. All right, this is where you start getting into payday loan type deals, okay? And that revolving door people get on with that. It's like, oh, I'll borrow money from that to pay off this, and now I got to pay, So, your credit card bill is due at its 20% interest, but you don't have the money, so you go borrow money from a payday loan company to pay off your credit card. Now you're paying 400% interest to pay off your 25% interest loan. In a ludicrous way of trying to explain it, that's the situation that the Fed is finding itself in. But this cancel of the bond buying today strikes me as very strange. Now, it could be totally nothing. Maybe they have a glitch. Maybe somebody kicked the plug out of the computer that they use. Who knows? Maybe somebody screwed up their algorithm. I don't have any idea. Okay. I just find it really, really, really weird that the first time they have a scheduled buyback after we cross 175, they can't do it, or they postpone it. Watch the markets real close, guys. That is your biggest indicator right now as to the health of the U.S. economy. And this is not, let's just put it this way. This is extremely interesting to watch and concerning. So, just thought I'd keep you guys in the loop. Pinball out.